Yo, what's going on, guys? Welcome back to the channel. In today's video, I have DB on as usual to begin the week. We have some analysis planned for you guys, some charts to jump into. A lot of crazy moves have happened recently. We have some news in the headline as well that's affecting price as we approach the top end. So let's get on into it. So here on BTC, I'm going to start off. I have my weekly order block labeled out for you guys here to make it pretty easy. We have the top end here and the bottom end here. My assumption was that we were going to test the lower end towards the bottom. We didn't get a full retest towards 65.2, so it kind of skewed my vision a little bit. I got caught shorting 69.5. That's the game of trading. You take positions and sometimes you win, sometimes you lose. The most important part is to be consistent throughout, up or down. So the situation right now is something that I am monitoring for a new position. We did play this end of price action really well when we tested down to the low end here. Even the rejection here, right down to the flip of 65.2, like I tried to catch again. And then even the flip here, the mid-range, towards the top end, even shorted up here for a move way down here. And then we ended up flipping this level again after deviating below over the weekend. The problem that I had this most recent move was looking to play directly in the middle with my invalidation really below this low, which was hindsight just not the right move. We needed this liquidity to fuel the next move. And that's something that I say all the time in my analysis, even when I'm tweeting. Most of the time, liquidations are going to fuel the next move, especially when we're chopping around a range, especially when price action feels so tight, on the weekend. Then Trump wants to come out and speak what he speaks and move the market in certain ways, and things are gonna happen like this. We are in a range until proven otherwise. We had a deviation above the top end recently and rejected tremendously, but we've nearly engulfed that full move. And I want to point this out on the 3-day. We look pretty good. We have 8 hours left to close. So if we are going to make a move, in my opinion, we should make it soon. So in the next 8 hours, I'll know what to do if I don't get a move that I want already. As far as like immediate reactions, I'd want a test of the midline of this most recent move. It would have to happen pretty quick for me to feel comfortable getting in a play like that because the invalidation is so tight. Or we close an hourly above here and then look to catch a flip for the top end or liquidity above here. And that's more or less immediate moves. You guys are not going to be able to catch that in this video, obviously, because that'll probably happen already. And if we push up first, then that situation is invalidated. We already swept significant lows that I would have wanted swept right here at 69.5. We had that flat candle right down there before the push up, the initial sort of flip attempt, and then we swept that. Absolutely perfect. And we're holding the top end of this weekly order block. So let me just point out this weekly order block as well, what I'm actually looking at. For those that have not seen the previous videos, this weekly order block here is an area that we've been chopping around for quite some time. And we're finally seeing closures out of that with some positive price action. We saw closures out of that, obviously over here, within this price action here, within this price action here, and then we ultimately rejected that and did not see closures above until the most recent moves outside of that zone. The thing with this closure is we had it pretty high. This last closure, we're getting in on the hourly pretty low here with flip attempts, which has me kind of unsure with the next move. Willing to ape in and chase. I'm willing to maybe try some tight limits intraday, but nothing I'm willing to chase right now until we begin to get a break outside of the midline of this level. And it would have to look something like this for me to sort of feel comfortable in that type of entry. Not in any rush. I want to look at the situation that happened with Hype as well as we approach resistance for it. I know it's a coin that's on a lot of people's radars, as it should be. It was a first mover here on this most recent move. We have this high on the chart is a area that I've mapped out, and that's an area of significance for me as far as resistance goes. We also had this weekly closure here in price that had me confident as an area of support. And we saw that level hold after a deviation below. I thought we were going to get a reaction towards these lows that we had painted here. I was wrong for that. I saw it also as a weekly order block right here, as you can see. When this weekly order block printed and we pushed above, we came back to test it after chopping around it for quite some time. We've now printed new highs in the price. So I don't think a reaction like that is really what's going to happen. And to think we're going to reject so hard out of this resistance as well, I don't think that's a significant reaction that you should look for. I think that there's a possibility that we retest 33.20, sweep these lows. So I'm looking to short here for a target of around here. That's ultimately what I'm looking for. As far as the short side, very tight invalidation, nothing crazy, something that I can see playing out. If BTC especially wants to put in a lower high, I could see hype putting in a good retest like that. Alts as a whole will begin to look shitty. They've had pretty significant moves out of the last couple of days, and I think that hype can be one of the leaders if it makes something like this. I want to take a look at Zcash as well. I think it's in a pretty interesting spot. I drew something like this yesterday. You see this 4-hour block here? That's a block of demand. People were looking to rebid this level on a push and retest down. So they're either trapped or they got stopped. That's where liquidity was. And that's where we're seeing liquidity pile up on this move here. I drew these squiggles here as potential reactions and potential plays that I could take. And we are seeing the top end play out. I unfortunately was not awake for that flip. I went to sleep yesterday, the flip happened, and I never re-entered on the midline flip, which is the reaction that I'm looking for on BTC when it comes to a long side flip of the range. Just like on Zcash, where we're playing these order blocks, that's on the 4-hour. This is more or less, I would say, higher time frame because we've been trading around this range for quite some time. I would look for a flip like this if you're looking to get a little bit more comfier long rather than chase, because liquidations fuel the next move. And let's be real, if this does not flip soon, we're pretty much probably going to retrace the whole move from this morning. For Dogecoin, I want to take a look at Dogecoin because I was playing it this weekend. We had a good low hold here. This is also range significance, so we are trading a range. It is relevant to talk about how reaction like this occur. When price action come down to the low end of these wicks, they're more likely to hold. You should be interested in looking for opportunities like this, especially when the RSI wants to print these higher lows. It'll give you more confidence, especially when we're in a range like this, because a move's going to happen. It's just where from, and is it likely for liquidity to take me out on this move before the next move happens? And that's pretty much what I think when I'm in play is when the RSI is compressing like this after some higher lows, I'm more convinced to look for longs than I am for shorts. It does not mean that we can't go lower, which is why I have my invalidation in place, but that's just something that I look for when I am trading. Now I want to take a look at Tau as well. Just like Hyper was a first mover, I drew this scenario out on it, played out absolutely perfect. We had, again, this 4-hour order block here. We looked to flip this and created some crazy price action on that first go ahead and been chopping around ever since. We got one real 4-hour closure above it before eventually rejecting and kind of compressing within this price action that we saw here, and eventually broke up and flipped that level. And on the lower time frame, you could have caught this move really nice. I mean, the hourly, you were pretty close, pretty much a little chop zone to catch. On the 30-minute, we saw compressed higher lows into that closure above with the RSI trading above the 50 there. So that was a good opportunity to get long as well. We are now holding the top end of this level. So, I mean, if you're looking to rebid, you're looking to aggressively. And we're looking to make the ascension up towards 220. I think 220 is the next logical move for Tau. I think those highs are the target next in price. I think that's what Tau is trying to do and people trading it. So be on the lookout for any good retest for it. You see how strong it held with the pullback that BTC had into 69.5. That says something, but it does not say everything. That's just a piece of the story that's happening in price action right now. What I would look for an entry, might not happen, is like a retest around this block. So the top end, 186 would be a prime opportunity for me. It would be below today's open. It wouldn't go with what's happening in price action right now for BTC, but it provides good opportunity given you're not chasing super aggressively. If I was looking for something more aggressive, then I would have to say, like, entering here is not the worst. I mean, entering here with your invalidation below 195.5 is not a terrible opportunity to take. I mean, you have highs that are going to probably get taken. So you have whatever move comes after that to be like safe in moving your stops up. And I think that anywhere within this wick here is pretty much an intraday target. So 208. So, like I said, you have these highs to target, and it's probably going to get targeted before these lows do. So, in that case, we should get a move anywhere into 204 to 208. Seems pretty logical to me. And if you are taking easy invalidation plays like this today, you do want to be moving your stops and taking profit pretty aggressively for that. You pretty much get a 1-to-1 as far as risk to return. That's pretty much all I wanted to talk about right now. I know you're going to look into some index DB, so I didn't want to jump into that. So I'm interested in what you have to say, but yeah, that's pretty much all I had, bro.
What's going on, guys? DB here with another market overview with Woods. Let's get straight into it. Obviously, the price action in the last few days and hours has been massively influenced by the recent geopolitical tensions, but this is why we do macro analysis and why we look at the macro levels, because ultimately they are not as much affected and the macro structures never really changed because of short-term catalysts for the market. So looking at the S&P 500 since December, it has been showing some weakness, dropped 5%, which is still nothing extraordinary, but still looking relatively negative. I think that my view remains unchanged, that I expect some 5 to 10% drop on the S&P 500 this year. Remember, it is a midterm election year, and historically the S&P 500 has been performing weaker in midterm election years, so still has some time to play out. We're currently battling with the weekly 21 EMA, which has been holding as support since the April dip last year. So acceptance below this area would be additional confluence that we could actually drop towards lower levels. The big zone of interest for me remains still between 6,300 and 6,000, which is pretty much the previous all-time high area. So we did have a nice relief in the last few hours because of different tweets, headlines, right? Trump suggesting that the war may be coming to an end. We did have G7 countries suggesting that they may be opening up their oil reserves to the market, which lowered the price of oil, affecting markets positively. But ultimately, on the greater scheme of things, we're looking at the weekly time frame. My macro thesis on it remains unchanged, and I think it will influence crypto as well throughout the year. DXY, its strength, you know that DXY for me is one of the most important macro indexes to effectively navigate asset markets, be it crypto or stock markets. When the dollar is strong or stronger relative to other fiat currencies, then asset markets suffer more. When the dollar is weak, asset markets thrive more. We did have a nice breakout on the 3-day trend. We're currently retesting it. Note how we rejected from the 100 area, which still remains a pretty big zone of resistance. While we rejected at this zone on more lower time frames, we did have a nice relief in the markets, right? We did have that buyback in the crypto market from the weekend dip. Stock markets have been green, and at the same time the dollar has been dropping, but we're retesting this area right now. So this is going to be a very, very important level. If we hold here, I think we can go for the 100 area one more time, and that could bring the crypto market into some difficulties. And remember, on the greater scheme of things, the dollar still trading at macro range lows, which is not in my chart right now, but you can imagine, give or take, with a 2-week bullish divergence, right, which is a good macro reversal confluence. But ultimately the 100 area remains very, very important. So that's on the macro side of things. Nothing much to update. We've been talking about the DXY and the S&P 500 for several weeks, so nothing new to add on that. Looking at BTC, Woods already covered it perfectly on more lower time frames, so I'm not really gonna go into lower time frame levels. I'm gonna stick to the daily time frame, higher time frames in this case. For me, 72 to 80k remains the broader resistance area for BTC. And then obviously on lower time frames, you can look at other levels where you want to take positions short. But for macro navigation, I think 72 to 80k is a very big area. We do have April 25 lows. We have the 2-day, 3-day, 21 EMA in this level. A lot of confluences that suggest that we could be printing a lower high. Something I'm monitoring, and we have been discussing about this in previous videos when we were right here, is another potential bear flag, right? It's not confirmed. We don't know if it's going to play out the same way, but we have a lot of similarities to the price action we did have here. So at least we will not ignore it, right? For BTC, it is shaping up quite nicely. And we have on lower time frames 2 levels where I would be interested to be taking shorts. First of all, as you pointed out, we do have a possibility of a lower high being printed here at around 71, 72, 73k, right? If this zone does not serve as a resistance area, then I will be looking for an extension of this bear flag and possibly a retest of the 74, 75, 76 zone, and look for some 12-hour bearish divergences at these bear flag range highs. Obviously, if we get this, I will be more interested in shorting, less interested in longing. And then if the bear flag is invalidated, say we start accepting higher above these range highs, then we do not need to talk about a bear flag anymore, right? Then we can just consider our higher time frame zone of interest. But for now, it is shaping up in a very similar way. Not only BTC, but any index that we can look at. We will look at USDT dominance in a second as well. So something to consider. And if we actually see this playing out, I think that we could start going back towards range lows at some point. And we have to keep one option open, which is also a possible breakdown, right? If it is a bear flag, just like here, or like we have seen historically in previous cycles as well, right? It's not the first time we're talking about bear flags. We've seen it in previous cycles as well, here, and before the next leg down. Then we have to assume, or we have to keep an option open, that we could actually get a breakdown and then reach significantly lower levels. Remember, at least in my view, BTC remains in a negative macro structure, lower low on the monthly. That's all I have to say. USDT dominance for more lower time frame navigation. I think it's one of the, I look at many indexes, total 2, total 3, others. It's mostly for educational purposes. Obviously, you don't need to make sense of all these indexes. I think if you want to pick one index on the side of BTC, you can go with USDT dominance. Perfect range here with clear range highs, range lows. We did have a deviation below range lows recently, reclaimed it, broke out of this trend line, and went all the way to range highs. This was a very nice long over the weekend. We did have a 2-hour bearish divergence on USDT dominance, 1-hour bullish divergence for BTC as additional confluence. Now we're coming back into range lows, right? So this is not an area where I personally push on longs. And this is also an area where we can print a higher low on USDT dominance and a lower high on BTC, right? If we find acceptance below this zone, then we can go for the scenario where we extend the bear flag on BTC. But as long as we're holding this area, this is not where you long. This is where you look for shorts. Simple as that. And here as well, if we zoom out, we are in a very similar scenario as we have been in January. And obviously, just like BTC, right? This is just the inverse chart. We have potentially a bull flag forming. And as long as that is a possibility, this is not something you ignore, right? Now, whether we print a higher low here or go for another sweep of these range lows remains to be seen. But in both cases, the bull flag would not be invalidated for USDT dominance. Look at this, very similar situation. We had 1, 2, 3, 4.5 tests of these range lows, then we had a break up, right? Very similar situation. Now, here again, if you start seeing acceptance below these range lows, the bull flag is basically invalidated. But as long as that is not the case, I think that shorts can print a lot more than longs. This doesn't mean that you cannot long. You can long and short on any market condition, right? But it's just talking about higher time frame macro directional bias. This is what I'm looking at, and I think that if this plays out, then shorts either from the 71, 72k zone or maybe the 75, 76k zone will print quite a lot with a very easy invalidation. So that's pretty much all I have for the crypto market macro. I don't really want to go too much into detail. I think you did a very good job in covering the lower time frame levels for BTC. I'm basically just interested in this bear flag to be resolved. I want to know if it's going to be invalidated and we can reach for higher levels, possibly even towards 80k, or if this actually plays out and we get a breakdown. And I think that we can prepare for a nice dip in the crypto market in the next few weeks and months.
I appreciate you, DB, for always hopping on. Every single week, we give you guys these analysis. Make sure that you check out his link down below to follow him on Twitter if you are not already. Also, check my links down below. Get indicators on your chart now. Get access to WoodsBot now. Make plans for the future. Think the year, not just the day. I want to leave you guys with just that. I'll see you guys in the next. Peace.